Today I want to look at another company that fits into that same bigger theme. It's a much smaller company with a valuation of $140 million. But some investors are comparing it to a company worth tens of billions of dollars. So the question is simple. Is this actually early or is this completely wrong? And the company is Sivers Semiconductors, SIVEF in the United States. And it's trading at $2.51. It's up 5.28% today. Right now, the company has a market value of roughly $130 to $150 million, depending on the day. The stock itself has been extremely volatile, which usually tells you more investors are starting to pay attention to the story. So what does Sivers do? Sivers Semiconductors. What they do might sound technical at first, but the idea is actually simple. They make lasers for photonics. We provide high power lasers and laser arrays that drive optical links for AI data centers and high performance computing. They also make wireless transceivers, providing beamforming transceivers and antenna modules that power SATCOM, fixed wireless access, and 5G to 6G systems, helping you achieve higher throughput, lower power consumption. The lasers that they make are not what you think of, such as in the movies. They're very small, precise lasers that are used to move data using light. Here is the CEO, Vikram Vathulia, explaining Sivers' two businesses.
What are the drivers? So as you know, we have two businesses, the photonics business and the wireless business, and growth came from both sides. And it also came from the sub-segments within our wireless and photonics business. So in photonics, we saw growth in the pipeline from pluggable customers as well as co-packaged optics customers, which are our two target areas. And then in our wireless business, we saw growth in our SATCOM pipeline. We saw growth in our fixed wireless access pipeline and our defense pipeline. So it's very broad-based growth, which is what we want to see as well.
Does it feel?
And here's why that matters. As artificial intelligence grows, companies need to move huge amounts of data between computers. At the moment, most of the data that moves is using electrical signals, basically through copper wires. But those systems are starting to hit limits, and they get slower, less efficient, and use more power as demand increases. Those electrical signals also generate heat, which means data centers need more cooling and more energy and more infrastructure just to keep up. So the industry is starting to shift towards using light instead of electricity to move data. And this is called optical communication. And that's where Sivers comes in. Now there are other companies such as Syntec Optics Holdings, which is trading at $10.75, which we own in the portfolio, and they're up almost 133% since we bought them. But they're playing a different role. Optics focuses more on building optical systems like sensors and hardware used in defense, medical devices, and imaging. And Sivers is different. They're focused on laser side. You can see the Syntec Optics also provides the shields for the military through Anduril. And Sivers is different. They're focused on the laser side. The actual source of the light used to move data. Let me go back to the Sivers website here. In these next generation systems. So they're both optics, but they sit in very different parts of the stack. Now let's connect this to the bigger picture. We're going to NVIDIA. Companies like NVIDIA and IRIN are building massive AI infrastructure. And to make that infrastructure faster and more efficient, they need better ways to move data inside their systems. Here is an IRIN data center in Prince George, at the Prince George site in Canada. And to make the infrastructure faster and more efficient, they need better ways to move data inside their systems. That's why you're starting to hear terms like silicon photonics and co-packaged optics. But instead of focusing on the terminology, it helps to understand the basic idea behind them. Photonics is simply the use of light to carry information. Optics is the broader field that deals with how light behaves and how it can be controlled. In traditional systems, data moves as electrical signals through wires. But in photonics-based signal systems, that same data is converted into light and transmitted optically. Light moves faster, produces less heat, and can handle more data at once. So as AI systems scale, companies are shifting from electrical signals to light-based communication. And that's where lasers become critical. Because without the laser, you cannot generate the light that carries the data. And this is where the comparison starts. There is a much larger company in this space that rivals Sivers, Lumentum Holdings. The stock symbol is LITE. They supply components into optical systems and are worth tens of billions of dollars. So the argument is simple. If Sivers is supplying similar types of components for the next generation of this technology, why is it worth only around 140 million, or should it be worth more into the billions? Now here's where the numbers get interesting. Sivers is currently generating roughly $20 to $30 million in revenue. So from a financial standpoint, this is still a very small company. They're also not profitable yet. Sivers Semiconductors surged recently following a major strategic partnership and plans for U.S. listing. These catalysts, along with record 2025 revenue, drive positive sentiment. Analysts project an inflection point by late 2026, though sentiment suggests caution regarding persistent net losses and potential dilution from upcoming capital raises. They are still operating at a loss, which means they're still in growth mode and investing heavily into the business. But at the same time, they've talked about potential pipeline of around $400 to $450 million. So you have a company doing around $30 million today, talking about hundreds of millions of potential future opportunity. And that gap is what attracts investors to this type of setup. Now, there's also another idea behind this thesis that is important to understand. Some investors look for what they call choke points in data centers. And a choke point is part of a system that everything else depends on. If that one piece is missing, then the whole system does not work. And in this case, the argument is that lasers could be one of those choke points. And without them, these optical systems cannot function. Here is Flex AI explaining the AI data centers, what they're facing in a major bottleneck.
If you've been following the data center industry, you've probably heard that data centers are having a hard time getting access to power. But there's a bigger issue that data center developers are facing right now that no one's talking about. The problem is network and fiber. You see, AI data centers require 100 times the amount of fiber optic cable, that's millions of square feet, than cloud-based or regular data centers. You might have hundreds of thousands of GPUs, but you can't fit all those GPUs in one facility most of the time. So usually you have hundreds of thousands of GPUs across multiple different sites that asynchronously transmit data. That takes a lot of network, especially fiber optic cables, to be able to do this data transfer. The problem? It takes about 60 weeks for us to get fiber optic cables currently because of the broken supply chain and the demand for AI data centers. So most people think power is the main issue for data centers. It's not. It's that we're running out of network infrastructure to transmit billions of parameters of data between all of these GPUs.
Now this is where things get more interesting, because we are starting to see real developments. Sivers is working with a company called Jabil, JBL, stock ticker, trading at $306.06. They are a major global manufacturer. Together they are developing next generation optical modules using Sivers' latest technology for lasers. These systems are designed to move data at extremely high speeds, around 1.6 terabits per second. And you don't need to focus on the numbers. The key point is this is next generation infrastructure, and Sivers is being included in it. That suggests this is moving beyond just theory and into real world development. There's also another important update. Let's go to news here. Sivers is evaluating a potential dual listing on NASDAQ in the US while also raising capital. So that tells you two things. First, they are trying to get in front of US investors and be seen as part of the AI infrastructure story. And second, they are preparing to scale the business. But there's a trade-off. Raising capital usually means issuing new shares, which can dilute existing shareholders in the short term. So while these updates support the growth story, they also confirm that this is still an early stage company that needs to execute. Now let's talk about the risks. First, there's an entire shift to optical systems needs to happen at scale. If adoption is slower than expected, this story takes longer to play out. Second, Sivers needs to actually win and keep supply contracts. Being involved today does not guarantee long-term success. And third, they need to scale production, which is difficult for smaller companies. And finally, they're competing with much larger players like Coherent and Lumentum, and these companies already have scale, resources, and established relationships. So the timeline is also important. This is not a short-term story. This is a longer-term infrastructure build-out. And if things take time, the stock may not move away, even if the thesis is correct, if things take time. For me, this is not something I will look at as guaranteed outcome. This is high upside, early stage idea. And if the thesis plays out, the upside could be significant. But if it doesn't, or if it takes longer than expected, then patience is required. This is also why it fits into a broader theme I've been talking about on the channel. These are early infrastructure plays where the narrative is forming, but the markets are not fully priced the potential. They haven't priced the potential. But we've seen that with Ondas in defense, Crack in underwater systems, Iron in computing and energy, and now Sivers in AI photonics. They're all different industries, but with the same idea. Early positioning in parts of infrastructure that could become much more important over time. So the question is this: is Sivers an early opportunity sitting in a critical part of the next generation of AI infrastructure? Or is this simply a compelling story that has not yet been proven? I'm also curious what you think. Would you take a position here based on potential, or would you wait for more confirmation before getting involved? Let me know in the comments. And also one more thing. For anyone who wants to go deeper into this type of setup, I posted it in alpha access over on buymecoffee.com 20-minute stock hunt. I break down a few stocks, including SIVEF. And I also included a really strong photonics article in there that helps explain the space at a deeper level. And if you want to understand what's really happening behind the scenes, it's worth checking out. And the link is in the description. And we'll see you in the next one.